Welcome to my channel. I'm Scott, and in this video, I am going to walk you through the process of valuing Support.com stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Support.com is a tech support company for businesses and consumers. The company supports pretty much any type of computer or smart device. The services are performed by the company's employees remotely. Most of their employees are in the US. It owns SUPERAntiSpyware, which offers anti-malware software. It also owns Right Hand IT, which provides managed IT services for small businesses. The short interest on this stock was as high as 67%. AMC short interest got up to 61%, and its stock price went up 301%. GME short interest got up to 51%, and its stock price went up 821%. There is some speculation that this company's stock price may get up to $45 a share by September 10th. So far this year, short sellers have lost $32 million on this company's stock. The company is in the process of doing a reverse merger with Greenwich Generation Holdings. A reverse merger is when a private company acquires a public company so they can be actively traded on a major stock exchange. In order for a private company to be publicly traded, it has to go through the IPO process, which can be long and expensive. A quicker way to become public is just to acquire a public company. And that's exactly what Greenwich is doing. Greenwich owns and operates a vertically integrated Bitcoin mining and power generation facility in upstate New York. I went to college in Buffalo, so I was curious where in upstate New York this company is. They're in Torrey, New York, which is between Syracuse and Rochester. Greenwich expects to be the first publicly traded Bitcoin mining company with a wholly owned power plant. I keep hearing corporations say we're the first publicly traded Bitcoin mining company, and then they add a stipulation. It has a hash rate of 1.1 exahash per second, and that's expected to grow to 2.6 by next year. It has 19 megawatts of mining capacity today, but that is expected to grow to 500 megawatts by 2025. They spend the least amount of money to mine Bitcoin. It only costs them $2,900 per coin. Once the reverse merger is complete, Support.com will change its name to Greenwich and change its ticker to GREE. The merger is set to close in the third quarter of this year. Support.com stockholders will own approximately 8% of the new entity, and Greenwich will own 92%. Support.com shareholders will receive 0.12 shares of ticker GREE for each share of SPRT they own. That means you receive 1 share of GREE for every 8 shares of SPRT you own. The company is headquartered in Wilmington, Delaware, and was founded in 1997. It started trading in 2000 and can be found on the NASDAQ. Let's get started with the model. This is a microcap company, 283 million market cap. They're trading at $11.67 a share, and they have 24 million shares outstanding. Let's look at Support.com's financials. Their free cash flow was negative in 2019, a small positive in 2018, 2020, and the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was negative in 2018 and the trailing 12 months, positive in 2019 and 20. Revenue is a sales for the company, and that goes down each year from 70 million down to 39 million. These are the company's income statements. The top is Support.com, the bottom is Greenwich. So you can see Support.com has decreasing revenue each year. Greenwich revenue went from 4.4 million to 20 million. Support.com did have positive operating income in 2019 of 3 million, but that turned to negative 3 million in the trailing 12 months. Greenwich has negative operating income each year, but in 2020, they had negative 2.6 million of operating income. Depreciation is a non-cash item. So if you strip out depreciation, they actually have positive operating income. And Support.com has negative net income in 2018 and the trailing 12 months, positive in 2019 and 20. Greenwich has negative net income in both years. Greenwich spends $12.5 million of expenses to operate their crypto mining machines. So that's their big expense. It's really expensive to operate those machines. But I imagine as their revenue increases and economies of scale set in, they'll start to become profitable. Greenwich had 26 million of revenue in the trailing 12 months. They're expecting their revenue to be 78 million by the end of this year, 145 million in 2022. and they're expecting their EBITDA to grow to over $100 million by 2022. So after 20 years in business, it appears Support.com's EBITDA is negative because EBITDA is operating income plus depreciation, and they don't have too much in depreciation. This is the company's statement of cash flows. The top is Support.com, and they did have positive operating cash flow every year except in 2019. Even though they didn't have a big business, they still managed to have positive operating cash flow. There are different ways to run a profitable business. You don't have to invest billions and billions back into your business like Amazon and Tesla did. You could try to run a lean operation and squeak out a small profit, and that's what they did. But their revenue is declining, so it doesn't look like things are that great. They don't invest too much back into their business. Their highest capex was $900,000. And they do have positive free cash flow every year except 2019. Greenwich had negative operating cash flow in 2019, positive in 2020. That makes sense because remember we look at their operating income, that was negative, and if we add back their depreciation, it would have been positive. So they do have a small positive in operating income. They invested $3.5 million in property, plant, and equipment, then $4.5 million. The line below it says deposits on minor equipment. I think that should also be part of capital expenditures. That was $6 million in 2019 and $6 million in 2020. So their free cash flow in 2019 was negative $16 million. In 2020, it was negative $10 million. Because remember, free cash flow is cash flow from operations minus capital expenditures. So if you just looked at free cash flow, you might say Support.com is a much better business. But if you look at all the numbers, you might not think that's the case because their revenue is going down year after year. And we don't have much info on Greenwich, but it seems like their revenue is on the incline. Support.com has $40 million of equity on their balance sheet. They raised $259 million from issuing stock, and they lost $212 million from running their business. So it doesn't look so hot. You see, Greenwich doesn't say stockholders' equity, it says members' equity because it's a private company. There are no stockholders. There are members. There may be one member or many members, and members can be individuals like me and you or big companies. So their members contributed $69 million to the operation, and they've lost $25 million so far from running their business. Let's look at Support's capital structure. They have $40 million of equity and no debt, so they're 100% equity, and it looks like they have $38 million of cash on their balance sheet. Support's stock price is around $12 when I'm doing this video, which means their market cap is pretty close to $290 million. So that would imply the new entity will be valued at $3.8 billion. If the stock price gets pushed up to $40 a share, then the new entity's market cap will be over $12 billion, which is just crazy because they're not really generating much revenue and they're losing money, of course. This is where the stock has been trading since 2000 when it IPO'd. It does appear the stock was trading at $90 a share, but it was never trading this high. They did a 1-for-3 reverse stock split in 2017. So all the numbers before 2017, you need to divide by 3 to figure out what the stock was actually trading on that day. So you can see if you invested at the IPO, you would have lost about 90% of your money. This article is from the Wall Street Journal back in 2000 when the company IPO'd. It says Support.com, a profitless company in the e-commerce software industry, has IPO'd and was successful. The share price opened at $25.50 and closed at $32.58. That makes sense because if you multiply 32.58 by 3, that looks like would be the stock price up here. So before 2001, they used fractions when they talked about stock prices, like 25.5, 25.25. They didn't use decimals like today, like 25.50 or 25.25. The stock shot up over 100% at the IPO, but you can see what it's done since. This is where the stock has been trading the past year. So you could have made a ton of money if you bought the stock down here, because the stock really shot up when they mentioned that merger with Greenwich. Plus, the Reddit community is really buying up this stock and trying to apply a short squeeze. So I definitely think the stock price can go a lot higher. And they have a pretty low beta, 0.68, so the stock isn't too volatile. It's up 400% in the past 52 weeks, a lot better than S&P 500. The 52-week low was $1.62, the high was 15, and the stock is trading well above its 50-day and 200-day moving average. This is a really popular stock. 14.5 million shares are traded each day. Of the 24 million shares outstanding, 9 million are on float, half are held by institutions. And look at that short percentage, 63% of the shares on float are shorted. The stock is up a ton the past year, 3 years, and 5 years. If we looked at this chart a few months ago, they would have been all negative. Their annual earnings have increased 54% each year for the past 5 years. If you put $10,000 into this company 10 years ago, you'd be at $28,000 today, an 11% annual return. But you would have been in the red if you sold the stock a few months ago. You would have lost 70 or 80% of your investment. Greenwich is their biggest shareholder at 31%, then 210 Capital at 16%. The ex-CEO Richard Bloom owns 5.5%. He was recently replaced by Lance Rosenzweig. The next shareholder owns 5%, then 3%. After the merger, the new company will be 69% owned by Atlas, 19% by existing shareholders, 8% by Support.com shareholders, and 4% by the management and board. Atlas Holdings is a manager and sponsor of private equity funds. They own 23 manufacturing and distribution businesses. And it looks like they own other mining companies. They own and operate 1,164 megawatts of merchant power generation assets in New York and New England. The idea is Greenwich can leverage their relationship with Atlas and maybe connect with other mining companies. Let's look at Support's financial ratios. They have negative net income, so we can't look at the PE. Price to sales and price to book aren't terrible, but they are on the higher side. 7.2 price to sales, 7.0 price to book. Support.com has a really high current ratio and quick ratio. They have $38 million of cash on their balance sheet. They always seem to have a lot of cash on their balance sheet. They had $49 million of cash as of their 2017 balance sheet. This article on Support.com's website says the combined entity will have $70 million in cash. $33 million from Support.com. That seems to make sense. That implies $37 million from Greenwich. But Greenwich had only $5 million of cash on their 2020 balance sheet. But it's definitely possible they generated a lot more cash the first half of 2021. This is Greenwich's balance sheet. And you can see they have $65 million of assets. Most of their assets are in property, plant, and equipment, $51 million. Those are the computers and machinery in order to generate the Bitcoin and cryptocurrency. Their current assets are $14.5 million. Current liabilities are $12.4 million. So the current ratio is above 1. They only have $254,000 of digital assets. I thought they would have a bunch of Bitcoin sitting on their balance sheet, but it doesn't seem like they have much. So to summarize, it's really hard to value this company. I really don't understand how to value cryptocurrency stocks. It's so much easier to value manufacturing companies that manufacture things like cars or phones or anything, because there's a cost to manufacture the product, then there's the price they sell the product for. It's so much easier, and there's not too much volatility there. Things definitely go up and down, but not too much. There's a ton of volatility with Bitcoin and cryptocurrencies. So it's really hard to value. It's just kind of like a guess. But you could make a ton of money because I think the stock price will go up a lot with the short squeeze. But it will come down. It's just a matter of time until it comes down. So try to get out before it crashes. I ranked their free cash flows, revenue, and ratios 1 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.